Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 30th of October 2020, and we're launching a new Friday slot entitled Financial Political News. So let's take a look. Since this channel began, every Saturday we published our Gold and Silver Weekly Update, a video which, with a few exceptions, tend to receive the most views each week. Now, a couple of months ago we then launched our midweek update, which we plan to produce each Wednesday, just to give an overview of where we are in terms of markets, precious metals and currencies. Now, recently on a Sunday, we've launched our Peak Gold series, which will shortly be followed by our Peak Silver series once that is finished, and then perhaps use a Sunday for a series of video subjects. Well, today we're launching another, hopefully regular feature entitled Financial Political News Friday, where we shall review the news headlines of various financial online sites and briefly give our thoughts on those headlines. Now, we admit they're not scripted in advance and therefore literally will be mind ramblings as I actually come across those headlines. Now, the reason for this is that we're totally of the belief that precious metal prices are affected by more than just fundamentals, especially their short-term price fluctuations. And the same applies to equity markets, bond markets, and other financial instruments. So this is the first edition. Please comment below if you would like us to continue with this or not. If it's of little benefit, then of course we'll dispense with it. Meanwhile, we list below some of the videos we have produced this week for ease of access. Interestingly, they've not been viewed to the same extent that our previous videos have been viewed, and perhaps if anyone watching this or listening to this have perhaps some constructive comments to make as to why the viewership has gone down over this past week, we would greatly appreciate it. Obviously, we're missing something and we're not sure what that is. So let's go over to this review. Well, as part of our Friday review, let's take a look at a number of news sites, the first being Bloomberg. And we can see, main headline, Merkel says EU should have acted sooner. Obviously, she's responding to the coronavirus pandemic. And then we have EU nation that beat first wave of virus now wants to test everyone. US hits record as global cases top 45 million, virus update. And France says that the second lockdown will cut economic output by 15%. And then we have some subheadings here. 5 things you need to know to start your day. UK house prices jump more or most in 5 years. A government stimulus program pays off for homeowners. So in the middle of an economic crisis, in the middle of an economic slump, UK house prices are rising. And right on the brink of us leaving the European Union. Markets, these are the European stocks to watch in the US vote. Renewable energy, automotive and construction stocks may benefit should Joe Biden win. And Apple shares fall after iPhone sales miss, and iPhone sales missed Wall Street estimates, and revenue in China slumped. And moving down, we can see Europe's recovery under threat after initial bounce, GDP update. Berlin's $7 billion airport finally opens in the depths of a crisis. Glencore cuts coal target again as Colombian strike hits output. Total says it's doing okay at $40 oil as profit tops forecasts. You may remember yesterday and the day before we pointed out that crude oil prices have now fallen below $40. And NatWest Bank swings to profit while pandemic loan provisions dip. And then moving on, we have some further sub-headlines for different parts of the world, but the big story is clearly latest on the virus. Bloomberg Wealth, we can see here, Jack Ma's anti-IPO lures $3 trillion of bids in retail frenzy. Now this was updated just 2 hours ago. What does this actually suggest? There's still money swishing around the markets. Rich buyers seeking open spaces fuel a housing boom in US West. How to invest during Brexit. Look outside the UK, fund manager says. And what a Trump or Biden election win means for your money. Isn't it interesting that, as just mentioned, we're in the depths of an economic crisis, the depths of a pandemic, and yet in certain sectors of our economy, both in the United Kingdom and the United States, we can see house prices rocketing. If we click over now briefly to Reuters just to see how they compare, obviously a lot of the news will be shared by these various institutions. National lockdown not inevitable, Rob says. A national lockdown in England is not inevitable to contain an increase in COVID-19 cases. Foreign Minister Dominic Raab says, adding that a localised approach could work if everyone sticks to the rules. As final weekend looms, Trump and Biden to barnstorm across the Midwest. Man in custody over alleged links to Nice attacker. BA owner IAG slashes costs to survive COVID chaos. And penny pincher or deal king, Arnold gets his discount in Tiffany takeover. And again, repeating perhaps what Bloomberg has said, UK house prices accelerate again, but slow down likely. Apple's late iPhone launch wiped $100 billion off its stock value. But when you consider it wasn't that long ago, its stock value was over $1 trillion, maybe $100 billion. Yes, a fair sum, a huge sum for most companies. For Apple, perhaps it can take it in its stride. And then we talk about barnstorming across the Midwest. And some top news, admittedly more UK focused. FTSE 100 set for worst month since March on virus resurgence. Coronavirus consolidation taking toll on energy jobs. AstraZeneca sells right to heart failure, blood pressure drugs for $400 million. Whoever said there's no money in pharmaceuticals or in the health service? Industrial heating oil nationwide. Next day delivery. New Zealand approves euthanasia. Set to reject recreational marijuana. And as we saw earlier, NatWest swings to profit as pandemic loan charges fall and thwart US veto or await new president. WTO, that's the World Trade Organization, has leadership dilemma. And if we look at business, which is perhaps worth just a quick glance, Norway Wealth Fund says it's hard to find right green energy projects. And let's not forget, whatever one's view is on climate change and green energy, the investment community are taking this area seriously. We know because we get many brokers' reports, and time after time they're coming in, green investments, green energy, carbon emissions. These people are taking this seriously. And if, and we're not saying it will happen, if the world's leaders gradually become more and more left-wing, this issue will rise to the top without any doubt whatsoever. So if you're a long-term investor and you're interested in investing in markets, you cannot ignore this sector. Well, you can, but if you're out to make profits, you should not ignore this sector. Whether you agree with it or not, it's not only here to stay, but it's here to grow. Volatile oil prices still poised for second monthly decline. And yes, we have stated and we've produced numerous videos where we've highlighted that, strictly speaking, oil prices should not be anywhere near as high as they are. The reason they're so high is because of the OPEC and OPEC Plus cartel. If that was removed and oil was allowed to trade freely on open markets, you'd have $10 a barrel oil. It went down to that level once before. However, the problem will be it will decimate numerous industries, numerous jobs. The consumer would be better off. Short term, medium term. Long term, debatable. Depends how quickly the world's economy can move away from oil and towards some other, arguably more efficient, if it exists, or cheaper source of energy. Air France KLM warns of bigger losses amid lockdowns. Well, of course, any business in the airline industry, the tourist industry, is going to be decimated and has to have either deep pockets or access to additional funding in order to survive this crisis. Markets, world stocks take fresh dip as COVID infection rate weighs. Norway's Nel Statkraft agrees to produce green hydrogen for steelworks, and volatile oil prices still poised for second monthly decline, as mentioned. And if we go down to this part here, UK, Britain resists COVID lockdown as Europe counts costs, EU to fund transfer of COVID-19 patients across borders to prevent hospitals collapse. Can we just say, we have our COVID-19 deniers in the United Kingdom, as they exist in America, as they exist around the world. None of us can actually say what the true figures of the COVID death rate are. None of us. Because one, not every country truly declares them. Secondly, the basis upon which one is assigned as having died from COVID-19 varies. Someone could have a failing heart, contract COVID, dies. Is that a COVID-19 death, or is it just a heart attack? So we cannot be perhaps blindsided by the panic figures that have been highlighted. But one thing is for sure, and we're experiencing this, and I've experienced this with local hospitals. They're starting to fill up again with patients. Now, it could arguably be time of year, winter, etc. But it's interesting to see that now hospitals are actually finding themselves not only filling up, but becoming overfull. And the EU is now transferring COVID-19 patients across borders. So whether it's fake or whether it's real, something is happening. And let's take a quick look at Market Watch, which will look at some of the financials a little closer. And we can see Opinion, Apple, Amazon, Facebook and Google all produce record sales amid big tech backlash. Amazon has already had its most profitable year ever and just set a record for sales in a quarter. Apple's resurgent Mac sales make up for iPhone's shortfall. Apple to launch its subscription bundle Apple One on Friday. Facebook earnings offer vivid display of undaunted ad growth. CFO, that's the Chief Financial Officer, expects quarter four jump. And Alphabet stock surges as resurgent Google ad sales deliver big earnings beat. Now, this should not be a surprise to anyone because, of course, we're all faced with, to a large degree, being stuck at home. So what are people doing? They're going on their internet. They're going on their computers. They're buying things from Amazon. They're updating their computers because they realize the ones that they have are not now up to a full-time job. They are subscribing for entertainment. They're subscribing for information. They're subscribing for software applications. And those who are now running businesses from home realize that the most effective way that they can promote their business is the likes via Facebook and Google Ads. And this is why these companies have been so well placed for the crisis that we are in today. And we can expect this to continue as the lockdowns are maintained or even increased in some areas. So whatever you're seeing now, you can expect even more profits for these companies moving forward. However, perhaps and arguably the rest of corporate America, corporate Britain, corporate Europe is beginning to collapse, while these online giants rake the wealth in. Dow futures slide nearly 400 points and European equities slip as big tech earnings, COVID-19 and election worries weigh. Asian markets pull back ahead of US election. France cuts 2020 GDP forecast to 11% contraction. This is interesting. Walmart pulls guns, ammo from shelves ahead of potential civil unrest. Netflix increases prices in US after wave of pandemic subscriptions additions, stock jumps. So, whoever said that a monopoly is good for you? Netflix, because the number of subscriptions have increased so dramatically, they're increasing their prices. Now, this is quite an interesting area. Newspaper copy, the Philadelphia Inquirer. Feels like a classic October crash is on the way. Market strategist warns. The bears have ripped control away from the bulls, and if the S&P 500 falls below this level, it could get ugly. The asset class you probably haven't even considered, and why companies that spend their capital wisely are smart places for your money. Now, we've said recently that we're quite disappointed in the relative stability of markets, whether it be the equity market, the commodity market, and the US dollar, because we expected more volatility, especially this close to the general election. Maybe that volatility is beginning now. Or maybe, and we did mention this very briefly in a video a couple of days ago, maybe the markets have already accepted what they perceive to be the outcome of the general election. Russia is the New England Patriots of messing with elections, said Dan Coates, Trump's ex-Intel chief. Trying to find the most tax-friendly place to retire? Look at this one, precious metal people. Lithium is at the heart of the electric vehicle revolution. Here's how the market for the raw material works. And what is the role of gold in 2020? Now, this is sponsored content by the CME Group, so just be conscious of that. And then we move down. The best reason to dump the whole fallback and spring forward routine, your sleep deprived self, and countries that will give you a remote work visa and how to get them. Okay, finally, just this small part here. Twitter shares tank as a profit. User gains fall short of expectations. Record 33% GDP surge still leaves the US economy in a world of hurt. Etsy stock has tripled in 2020 as lapsed shoppers return. Gilead unexpectedly cashes in with nearly $900 million in sales of COVID-19 drug. Starbucks says it lost $1.2 billion in fiscal quarter 4 sales because of the pandemic. And Ford blew away Wall Street expectations, but here's what analysts are looking at next. And New Zealand votes to legalize euthanasia but not marijuana. One of the reasons we are showing you the headlines, and particularly the commercial headlines, is to some extent in support of an argument that we've been putting forward for a considerable period of time, in fact, since the channel started. There is more to the price of gold and silver than just the basic fundamentals. Now, long term, we believe the fundamentals domain. They remain supreme. But one's definition of long term can vary from a couple of years to decades. And you have intermittent moves in between those time periods. And the same applies to equity markets, to all commodities, really. Because everything today is leveraged. And as we now paper trade, you also have differing influences, such as, for example, market expectations, political, economic, social, technological trends, all affecting various markets. And when we look through this here, it seems obvious today that when COVID-19 was announced and the pandemic started to take hold and lockdowns started to occur, it doesn't take a genius to think what businesses are going to be A, adversely affected, and B, positively affected by this. So, of course, anything to do with leisure, tourism, transport, where people have to get together, events, for example, like pop groups, events like basketball, events such as, what's the word I'm looking for, theatres, cinemas, this sort of communal gathering are going to be adversely affected. Air transport decimated. This is why Buffett sold his airline stocks months ago, because the writing was on the wall. And then, opposite to that, on the positive front, subscriptions to various forms of entertainment channels were bound to rise. Netflix, for example. Purchasing of subscriptions to information because people are now working from home and need to spend their time actively involved in something. New computer equipment, broadband, people moving from 4G to 5G if you have that facility, because speed now becomes ever more important. If you ran a business of commercial property, you'd be thinking, how the heck can I get out of this? Because you know that that industry is going to be so adversely affected in the future as more and more people work from home. Companies realize our productivity wasn't really that adversely affected with people working from home, so perhaps we shouldn't have these very expensive offices in these very expensive parts of the city. Let's encourage home working, which, when even I was a child, was an aspiration. And that was some time ago. This virus is pushing people and economies into this work-at-home culture, which to some degree is also great for law enforcement because there are less people physically interacting. Whether it's the basis of some master plan remains to be seen. But the reason we're raising this now is to really highlight that at the end of the day, there are more than one influences or influence factors that affect our investments, our precious metals, the US dollar, the UK pound, the euro, a lot of it in the very short term, in other words, in days, maybe weeks, is based on fear, greed, avarice, suspicion, rumour. Then, as the facts are revealed, based on more fundamentals, based on economic data being announced. And as a previous financial advisor, it was interesting that the training one had really to a large degree did not focus on this, because one was taught you invest for the long term, not the short term. In other words, whether President Trump wins an election or loses an election really makes little difference if your investment has been put away for a 40-year period. Whether Apple makes money or loses money makes very little difference if you're 20 years old and you're putting money into your retirement plan for when you're 60 or 65 or 70. And that was the basis upon which investment advisors were trained. But we live in a world today almost of instant gratification. We live in a world where people want to make a quick buck. Not that we think that's a good idea, trying to do that on a repetitive basis as far as financials are concerned, but that's the world we live in. Or we live in a world where 5 years is regarded as long term. And so when you condense the time period into such a short space, then you have to look at these other factors which can affect investment decisions. The one thing or two factors that usually remain true, tested over time. The one is, if you always want to ensure you make a profit, sell on a double. What that means is, if you invest in something and the price doubles, sell half. Sorry, I said sell on a double, I meant sell half on a double. Because once you sell half, you've now got your original investment back. Then when it doubles again, you sell half again. So you've now captured a degree of profit. And if it doubles again, you sell half again. Now, you'll never, ever come out having obtained the maximum amount of money. But you've protected your initial wealth. You've run along for the ride on the investment. And if that investment then crashed to zero, which happens so much often with penny stocks, certainly, and in other so-called popular investments, look at the tech bubble in the 2 decades ago, you still have your capital to reinvest, and you still have profits from that investment to reinvest in new ventures. And the second is, always try to buy when the market has collapsed. Now, of course, no one knows where the bottom is, and there is an adage in the stock market, never catch a falling knife, which means if prices are going down, don't suddenly go in and buy, you're catching a falling knife. That is true. You shouldn't really do that. Only gamblers do that. But there does come a time where you think, I believe the bottom is reached. Let's see if the market picks up a little from here, just to confirm that that bottom has been reached. And then you buy. These are all factors that over the coming months we at Illuminati Silver will start to focus on to help educate those who are new to markets, who are new to precious metals, to look for those little snippets of information that will have a bearing on your investment. You see, anyone can show you some shiny coins and say, this looks lovely, and we all get pleasure from that. Of course we do. We call it precious metal porn, because we're looking at what other people have and we look at it either with desire or we look at it with envy. But what is to us equally, if not more important, is trying to gauge the markets the right time to buy. And we don't mean necessarily, buy today because we think it's going to rise 5 cents tomorrow. But how often have the pumpers, when gold was originally $1,900, telling you to buy when it went down to 18, to buy at 17, 16, 15, 14, 13, 12, $1,100. And silver, when it was close to 50, telling you to buy because it's going to 100, and then it went down to 40. But don't worry, it's going back up to 50 and then 100, and then it goes down to 30. Don't worry, it's going up to 40, then 50, then 100, and then it goes down to 20. Don't worry, it's not only going to go to 50, it's going to go to 100, but it's going to go to 200, and it's going to go to 400, and then it goes down to 15, and then 11. Oh, don't worry. Yes, gold has now reached all-time highs, or have in the past couple of months. But it took 10 years nearly, 9 years. 9 years of people losing their shirt, and if they were investing short-term, would have lost a lot of money. So looking out for those factors, which to a large degree help you make the right choices, not guarantee, are crucial. And this is what we should be doing every Friday, reviewing what's going on in the markets, reviewing what's going on headline-wise, which could have an impact on our gold and silver prices. I hope you found today interesting, and if you have done so, kindly subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they're published. And tomorrow, of course, we shall be providing our gold and silver weekly update. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.